Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. In today's video, I'm giving kind of an update to a video that I made a couple days ago talking about kind of the different ways that I was going to be changing my investment strategy going forward. And if you missed that video, I'll link that above right now. But basically the premise of that video is I gave 3 different scenarios for what I was going to be buying going forward. The first scenario was that the overall cases with the virus starts getting better, and then I'm going to continue to do what I've been doing this entire time, which has been buying the reopening stocks. Stuff like Planet Fitness, Southwest Airlines, stuff like that, that would do really well when the economy and the ability for people to go out and kind of spend normally comes back. We have not seen that, so that kind of scenario is out the window right now. Scenario number 2 had to do with the Apple earnings report that happened on Thursday. And what I wanted to see from there is if things went poorly and the stock fell, I was going to be buying in. But I also put the caveat that virus cases had to be improving, and so we have not seen that. So in today's video, I'm going to be talking about why I ended up deciding to buy into Apple stock this morning, and kind of give 3 reasons why I'm very happy about kind of the results of the earnings report. Because even though the stock was down around 5% after hours from the earnings report, and it's down a little bit on Friday, I still feel very good about the stock overall. Also, before jumping in, I wanted to talk about some of the major earnings reports that happened on Thursday. I've been pinpointing these because this was probably the biggest week of earnings for the entire quarter. We had most of the tech giants release earnings on Thursday. We had Visa and MasterCard releasing earnings on Wednesday. And I kind of wanted to go through some of the ones that jumped out to me. So Twitter, ticker symbol TWTR, has been one of my favorite stocks. It was up big during the day, up around 8%, and then it was down almost 20% after hours. They had big beats on revenue with $936 million of revenue compared to $777 that was expected. But I've always talked about with these social media stocks, if you missed those videos from last week, I talked about all the major stocks with Twitter, Snapchat, Facebook, Pinterest. But the most important metric for me has been monetizable daily average users, which shows kind of the trend with the user growth. And while they had these very nice beats with revenue, they came in short with their daily average users with 187 million compared to 195 that was expected. So that was a big miss. And based off of the crazy rise that a lot of these social media stocks have been on, it makes sense that it sold off around 20% after hours on Thursday. Netflix was up big on Thursday after they announced that they were going to be increasing the price of their subscription models. So increasing price brings in more revenue, makes a lot of sense there. Facebook earnings saw a 22% increase in revenue, but they said that their usage rates were going to be decreasing probably for the rest of the year. This is one of these companies, a lot of these social media stocks saw big boosts in usage during the pandemic when people were staying at home. And so Facebook came out and warned that that usage is probably going to decrease for a little bit. And then Google might have been the big winner on the day on Thursday when they had beats pretty much across the board. They saw incredible ad revenue. They saw some great growth from YouTube. And overall, it's just a very solid earnings report for Google. And hopefully it'll kind of have investors relax a little bit when it comes to the ad revenue. And it was up around 8% after hours on Thursday. So that was the big winner. Before jumping into the Apple earnings report and kind of explaining why I bought in, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on why I bought into Apple stock, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. With that out of the way, let's talk about the 3 reasons why I decided to buy into Apple stock after it fell from earnings on Thursday. So the first and main reason why I decided to buy into Apple is it's not every day that a stock of this caliber falls significantly. I think a 5% move for a company like Apple is pretty big. And so seeing it drop by that much, I thought that this was a fantastic opportunity. People always talk about buying the dip, and in my mind, I bought the dip up aggressively this morning. Can't say it was aggressively. I do want to say that I took a smaller than normal position. So I had money set aside based off of an options play that ended up getting taken away from me. So I had a lot of cash. And I decided to take a smaller position because based off of the criteria that I had in my video from, I think that was Tuesday, for why I'm not buying any stocks right now, did not fully meet the criteria, but I did want to kind of dip my toes in. So I bought a little bit of Apple, and I'm hoping to buy more in the future when we see a little bit more information about which direction the virus is going to be taking us. So I did want to dip my toes in a little bit because I have missed out on companies like Apple for a long time. They've had an incredible 2020, and I just didn't feel comfortable buying at those prices. We had the stock split, it shot up, it has fallen, and now after this earnings report being down 5%, this was reason number 1 why I decided to buy in, because I wanted to buy on the dip. Reason number 2, I thought earnings were actually a lot better than kind of the market painted them to be. So you did have some very nice beats when it came to revenue, but the thing that people were kind of worried about has to do with the iPhone sales. And so iPhone sales have always been one of these things that I've pinpointed on Apple as being like the only bad thing I could say about the company. When you look at a company of the scale and track record of something like an Apple and a Microsoft, you have to look really tough to find something that you don't absolutely love about it. And the only thing I've ever been able to pinpoint about Apple is that their reliance on iPhone sales has always been so high. And so in this past quarter, they had lower than expected revenue when it came from iPhones, but they had beats on pretty much every other section of their business. Wearables, Mac, iPad, their services were all beats across the board. So for the short term, doesn't look great just because iPhone sales are so important. But with the 5G iPhone coming, the later release than normal when it comes to the iPhone, I expect this to be a long-term positive for the company. A less of a reliance on iPhone sales, I think, is fantastic for the company. So even though they missed on revenue for that reason, in this quarter, the things that I was more looking at came from the beats when it came to wearables, services, Mac, iPad, that type of stuff. These are huge beats, and less of a reliance on iPhone, I think, is a good thing for the longevity of the company. So that's reason number 2 why I decided to buy into Apple. Reason number 3 has to do with safety in my portfolio. So as I mentioned, I have done incredibly well in 2020. And so I wanted to kind of protect my portfolio going into the end of the year. I was up around 50% based off of the market selling off this week. It's closer down to like 42%. So I've had a pretty tough week when it comes to the overall market. But going into the end of the year, I do want exposure to the overall market. So that's why I decided to buy into Apple. And so you have some options to kind of protect yourself. You can just have money sitting in cash. You can buy like a dividend type stock, like when I talked about AT&T versus Verizon. If you missed that, I'll link that above. That was yesterday's video. That was Wednesday's video. And so you have different ways to protect yourself. And so one of the ways I wanted to protect myself is by getting away from the growth stocks. My portfolio is very heavy into stuff like Sonos at this point. I do need to make a portfolio video considering we are at the end of the month. But a way that I wanted to protect myself is to buy more blue chip stocks. My current portfolio has blue chips of Nike and Microsoft, but they make up a very small portion of the overall portfolio. So I'm trying to slowly add into some more blue chips. And the opportunity that I saw based off of reasons number 1 and 2 from this video was good enough reason for me to decide to take an overall position, because I think buying into a blue chip like Apple at a discount, that's reason number 1. 2, from earnings reports that I didn't actually think was that bad, reason number 2. And then reason number 3, I'm looking for more safety and buying blue chips to add to my portfolio. That's reason number 3. Putting these all together, I decided to take a little bit of a nibble at Apple. It's not a big position. I'm hoping to add to it in the future. But based off of all that, I thought this was a decent enough time to actually buy into Apple. So I'm very excited about that. So far today, my position is up 0.3%. So it's doing really good. But it's going to be a long-term position. I hope to kind of constantly add to it over time. But I just wanted to make this my first kind of dip into buying into Apple. And based off the earnings report, I thought this was a great time to do it. So let me know what you thought about the tech earnings reports that happened on Thursday. And let me know what you thought about the Apple earnings report. Do you think that the reliance on iPhone sales is kind of a problem for the company and you thought this earnings report was a good thing? Or are you worried about the short and long-term potential of the company? Let me know in the comment section down below. Thanks for watching this video. I appreciate all the support, and I will see you in the next video.